Well, hello everyone, this is Sammy Hegab. Now today I'll be giving you a quick introduction into QuoteStream Level 2 and what Level 2 is all about. So this is a new service I actually subscribe to help me with my trading strategies. What I'll do, because I'm actually fairly new to this myself, I'll basically share the knowledge that I have so far. And now we'll look at some of these windows and we'll try to explain what each window is all about. So here I've got Portfolio Manager. Now I'm watching 1, 2, 3, 4, about a few shares here, as you can see. Strategic Mineral, Jubilee Platinum, Highlander Resources, Premier African Minerals, Berkeley Energia, and so on. And you've got Hurricane in here as well. So what I'll try to explain to you is this is very clear, self-explanatory. The changes in the moment, as you can see, ECR, which is a gold miner in Australia, is down by 6%. Now this is all real time, but unlike level 1 real time, you get a little bit more detail. Now what details you get in level 2 is market depth. Now what market depth is all about, right? Okay, so here you see these are the buys, right? So they've got, someone here is saying I want to buy 7,000 shares at 44 pence, 0.44, and on the other side here someone is saying I'm prepared to sell at 41.02. okay, and 42.4. Now this is, at the moment the prices are actually mixed up because the market's actually closed, so they're doing a market auction and they're trying to match the final orders. But in the real case scenario, what you'll see these prices here are higher than these prices here. At the moment the market's all over the place. As you can see, things are being corrected in here, right? So what would happen is, once the market's open, because now it's 4:30 in London, you'll start seeing the bid and ask price. The bid price would normally, well, obviously, as you can see here, 43.20 and 43.46. So there's a bit of a spread here, and that spread is usually created by market maker. The market maker acts as a buyer to sellers and a seller to buyers to create liquidity in the market. So if you're looking to sell your shares immediately, there will always be a buyer ready to buy your shares, and therefore, because of the risk, they have this spread between buying and selling, right? So if I wanted to sell my shares at the moment in, say, Hurricane Energy, I'll be having to accept the price of 43.20 if I'm only selling 13 shares. If I'm selling more than that, then I'll have to accept the price of 43.10. Now fortunately I've actually sold some of my Hurricane shares today, and I'm just going to look for it here in the time and sell. I sold it about 4 o'clock, so let's see at 4 o'clock. I'll show you the order I placed. So I placed this order here, 47.98, which is a good price. Looking at the market, the best buy price is 43.46. I'm slightly higher than that. It's obviously getting better now. So this is what I sold. I sold 11,000 shares, and as soon as the sale happens, it's reflected here in this order book. Okay, so this is as simple as it is. Now at the top you've got ticker. What I could do is, if I right click and I say edit symbols, I can add other symbols on the top which would scroll across. So in this case let's add SDX Energy. Look up SDX Energy, add it here. So I've got it added now. Say OK, and you'll see it at the top. So this is real-time prices. of SDX Energy is now trading at 65p. The all-time high was 67, but I usually buy it when it's down below 50p, and then I try to sell it once it gets to 60 and just do it that way. But if you're looking for a long-term investment, SDX is a very solid company. They are making good progress, and when they promise something, they always deliver, unlike some companies. Okay, so you can see now what the market is, and you can see the bid size. So as you just explained to you again, this is if you want to sell the shares. There's 200,000 shares which can be sold at 2.8 pence. So if you wanted to sell more than that, then you would have to accept a reduced price. So if we just search on JLP Jubilee, JLP, click enter. Now I can see here there's 200,000 at 280, 150,000 at 270, and there's another 150,000 at 270. So if I had 350 shares, 350,000 shares, then I'll be accepting the first 200,000 at 280, and the second I'll be selling at 270. Okay, and if I wanted to buy the shares, if I wanted to buy, let's say 300,000 shares, I'll be buying the first 250,000 at 290, which is higher than what the sell price is. So you can't actually just buy and sell at the same time, otherwise you'll make a quick loss. And the rest I have to buy at 3 pence. And here all these names are actually market makers. They're not buyers and sellers like us. So these market makers, or brokers in another way of saying it, they are there to create liquidity in the market, and therefore as you can see, if we look at wins, they're selling 200,000 at 280, and they're basically so they're basically buying at 280, so they're the buyer here. They're offering 280. So if I wanted to sell, I'll be selling at 280, and he'll be the buyer on the other end. And if I wanted to sell, and let's say that sorry, he's selling, therefore I'm buying at this price, so I would be paying 330 here. That's wins here. Okay, and likewise if I wanted to sell, he'll be buying at 280. So if I wanted to sell my shares, I'll be basically he'll be offering me 280, and if I wanted to buy those shares at 330, then he'll be selling them to me at 330. I hope that makes sense. Sometimes it is a bit confusing, so especially when it says here sell and buy, but if you think of it as the bid is a sell and the ask is the actually what you're asking. So this is what the market's asking you to pay 230.